Start the recording. I'll give you guys a synopsis how I trade, setups I've taken in the past few days, last week, what I'm looking for this week, and I guess my trading plan that I come into the market every single day with. So, need to close some shit. I'll get the screen share up in just a second. Alright, and if you guys have questions, you can type them or you can raise your hand and I'll bring you up and you can ask it here. All right, let's get my entire screen going. All right, you guys see this? You should be seeing my training view screen. Yes, okay. Perfect, so this is how I'm gonna start off the lesson. So just to give you guys context of how I how I trade, how I come into the market. So in the Discord, there is Wob, who's order flow expert. Then there's Shinobi and Spiffy. They are doing they have some strategy where they use rejection blocks and they basically top tick and bottom tick the market multiple times a day. For me, I trade a completely different style. I can't do 7, 8 trades a day. I can't. It's just, I don't have it in me. I need to take one trade, one high probability trade, and then I'm done. So even here on my calendar, this is my funded futures starter account that I've ran up. Some days this is 5 trades. This is really like 2 trades, but I scaled in and out. I jumped out of the trade multiple times. But look, 1 trade, 3 trades, 1 trade. I'm trying to get it to 1 trade a day, 1 to 2 trades a day. And that's what works for me. I can't do more than this. For me, that's just being a crash out and kind of being a drug addict on the charts. You don't want to take multiple trades, at least the way I trade. So how do I trade? So I like to think of the market in terms of a range. So think of the market as a rubber band. So if the rubber band expands, when you let go, eventually it has to return back to equilibrium. Same thing in the market. Let's say hold on. Let's say we're consolidating in this range, boom, 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 boom. And then eventually we break out. You could take a trade somewhere in this range. But for me, this isn't my high probability setup. For me, how I've came to look at the markets is looking for this move to get a pullback back into the range or change the trend overall. This is the high probability setup. So looking for a price to return back to equilibrium is what I look for every single day. So again, we're moving in a range, boom, 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 boom. Let's say we break to the downside. We take some sort of level here. I'm looking for signs of reversal. So what are my signs of reversal? So for starters, you're going to want to look for some sort of change in the state of delivery. So actually, I'll redraw this. What is a change in the state of delivery? Here. Okay. Right here. So a change in the state of delivery for me, what it means is the market is reversing, and clear indication of that is when we have a close above or below a prominent high or low. Meaning for the downside, a close below a prominent low, and if you're looking for the upside, a close above a prominent high. So here, this is our prominent high. Okay, let me double check I'm still recording. Okay, yes, I don't want to mess up the recording one more time. That'd be devastating. So right here, this is our prominent high. If we get a close above this, that is my reversal indication that we are going to trade back into the range, and I want to target these highs. This could be anything. This could be 8:30 news. This could be overnight highs and lows. You're just looking for opposing clear targets, clear opposing liquidity that you can take as a price target. So let's go into what I saw this morning. So this morning, I wasn't able to get a trade because I couldn't find an entry model. So another thing is we have here, price sweeps our liquidity, go lower, and then we finally get a change in the state of delivery. This could be our change in the state right here. It could be anything. It looks different every single day. This is our change in the state of delivery. And for entry, you want to use some sort of fair value gap or inversion fair value gap. So you could use here, you can use a fair value gap here for an optimal entry, or you can use one that's higher. I kind of drew it out so there's no fair value gaps here, but you can use one that's here. So let's say you were to enter late. Let's say you were to enter up here after we already broke out, after let's say we're like 20, 30 points away from the most optimal entry. You can still ride this trade. Doesn't mean you missed it. Doesn't mean you missed the trade. If I came on the charts and I saw this clear setup and there's opposing liquidity here, let's say this is our 8:30 news candle. This is 8:30 news. I could enter right here. I'm going to enter a fraction of my usual size. So let's say down here I'm entering, let's say here I'm entering 10 MNQ with a 15-point stop. Here I'm going to enter with maybe 3 MNQ, 4 MNQ with a 60-point stop. The point of the stop loss isn't so you need to be comfortable with the amount you're losing, but you shouldn't set a stop loss solely based on that. You need to set your stop loss to a point where your trade is going to be invalidated, right? So if you enter late, you could still capture this 100-point move that's still to come, only now you're going to be with less size, which also means less risk. You're going to be willing to let the trade breathe. You can enter right here, right? And then it's going to come down. You're going to be in drawdown like 20, 30 points, but your trade is still valid because we didn't get a close under here. We didn't get a close under the fair value gap. We didn't get a close under the lows. And you can still capitalize off the move. What time frame are you looking for the inversion fair value gap? Okay, so I'll show you. Usually I'm looking at the either 1 minute or 5 minute. You can also use the 3 minute. So today, what was I looking for? Let me actually show you guys my analysis for the day. I'm going to go to replay. Today was the 30th, and I usually go to 9 a.m. 9 a.m. I wake up and I chart my overnight levels. My overnight levels that were unswept, meaning we had this Asia low, but since we already swept it in London, I don't care for it anymore, right? I'm only going to mark the unswept levels. So for me, that was London low. And I like to look at what happened in the previous session. So we had new week opening gap, trading higher, rebalance, trading higher. What indicator you use for session lows and highs? It's called this ICT kill zones and pivots. All right. Anyways, so I like to look back and see the context. So what happened Tuesday, market close and overnight session, grinding up or accumulating buy orders. I'm still bullish. We filled that new week opening gap here. There's no reason, literally zero. You don't want to be that guy that shorts all-time highs. I want to keep playing longs until all-time highs until we get a -3% day. I'm not trying to be a genius in this market. I'm just riding the momentum. With price looking like this, every single day I'm gonna look for how can I look for longs. If it's a low-hanging fruit, if it's free, meaning if let's say we're going into market open, we take out some sell side. My objectives are always going to be higher until the day we sell off like 500 points, 600 points. Okay, so this is the 9 a.m. I think I posted in the channel. I was looking for longs to 933. Swept overnight objectives, looking for longs. So let me actually fast forward there. And on my chart, I had this high and this high. Okay, so price open, took out London lows, and immediately we rejected and continued trading higher. I personally cannot find an entry this morning, but I'm just showing you that this is the model, and sometimes price runs without you. You can't find the optimal entry. And this leads me to my next point, that CISD is more important than any sort of box or fair value gap. Today, I was looking for the fair value gap as an additional confluence for myself to enter, but it didn't work out. So this close right here above this prominent high, that was the CISD. You could have entered small size, targeting these highs. Stop below. Why wasn't I slightly short biased? Where do you see 4-hour change in the state of delivery? Barry, which candle? Oh, that's the daily, sorry. I don't see a 4-hour change in the state lower. For me, if the change in the state of delivery on the higher time frame would be a close under this candle. We never got a close. So this was our 10 a.m. Here, this was just we swept lows and then continued higher. Are you looking at ES? And anyone else, feel free to answer or to ask questions. But again, for me, I missed this trade. I was looking for the added confluence. I'm going to be honest. I missed the setup because I was looking for some sort of fair value gap entry. I had the bias, looking for long soon. It's just sometimes you can't execute. And I'm going to show you guys other trades that I've executed on in the past week. What does your change in the state look like for me? It is closing below the last row. Okay, so change in the state is going to be like this. You're going to see on every single time frame. This is a prominent high. Once we get a close above, that for me is an indication that the market is reversing. Can show you to the downside. Let's see. Or I can show you upside again. Change in the state. Keep going all the way back. Does change in the state usually get retested, or are they like bags? Yes, anything can get retested. I don't know. Breakaway gaps, is that when they just fly through the screen? It depends on the scenario. Sometimes you can have breakaway gap right away, or sometimes you can change the state, retest. You can have a fair value gap lower. Like, imagine there was a gap here, and you could wick right back in, and then continue going higher. You're not necessarily gonna be in zero drawdown, but if you're entering with light size, if the sizing makes sense, it's a good entry because your win rate is gonna be higher. So let's say we were targeting this. This is just a hypothetical trade. I'm not taking this trade. This is going into close. But look, you could enter the trade for longs here after the change in the state of delivery, targeting these highs. After this close, and your stop would probably be 100 points. If you're in with 2 to 3 micros, it's a good trade. You're still making money. But let's say you were to enter here before any sort of confirmation, right? And you're trying to get early on the move before we even confirm that we're going to the upside. You could size heavier technically, but you would just want your stops would be tighter, and there's greater chance that the trade is going to be a loss. It's going to affect your win rate because you're entering before this confirmation up here, right? You can target more points, and in theory you can put on more size because your position is lower in the range, but you're entering before the confirmation. You're kind of just shooting a dart in the blank, shooting a blank dart, and you have no idea when it's actually going to happen. Okay, so I'm gonna show you some other days. I believe let's go on the 5 minute. Let's go 30th. And whenever I'm backtesting, guys, or I'm doing my analysis, I always skip to 9 a.m. And again, what do? I mark out levels of liquidity. So what is unswept in this overnight range? So 6 p.m. open is here. 6 p.m. open. This is just the vertical tool to mark out zones. 9:30 open. This is the range we're working with for the analysis. And of course, higher time frame levels behind us. So London low, unswept. Remember this. London low, Asia low. This is actually relevant because we swept it going into 8 a.m. Asia low. And let's zoom out. 15 minutes. What are we looking for? We can get rid of this indicator for the highs and lows. We have these levels of sell side. And this is just basic ICT, understanding liquidity. And this level. Okay, what I'm going to be looking for this morning, or going into this session's morning, is I want to take longs back into the range. Remember, my model isn't catching the downside move. It's not catching the upside move during a breakout up. My edge is in catching the rebounds. Rebounds back to equilibrium. My edge is looking for this to come back. Here. Here. This is what's been working for me for the past like year and a half. How do you find your daily bias when not at all-time highs? So I just look for where we've swept liquidity. So for all the way up here, right? Let's say, I don't know if this was all-time highs. I'm looking to take trades after I see signs of reversals. I'm only looking for reversals. So going into 8 a.m., where we've sold off, what, like 300 points? My bias going into the day is looking at to the left and seeing these 15-minute hourly zones that need to be swept, reaccumulate orders, and go higher. I'm only looking for longs. I don't want to take shorts here because we have a clear narrative on the higher time frame. I can get rid of some of this junk here. We still have a clear narrative of the uptrend. If we get a higher time frame close under this final level here, that would be a higher time frame change in the state, and that's what would lead me to lean bearish in my daily bias. But since we haven't got, well, I don't know yet for sure. I can go down on the lower time frame. What if you got a 1 hour close below Asia lows? Then I would be leaning more bearish, but going into 9:30, I'm going to expect some sort of move. So let me just carry on with what I was doing. So if I can go 1 minute, no, it doesn't let me do 1 minute. So price trading. Okay. 9:30, 9:40. We swept this level, and now I'm going to be looking for strong signs of reversals. Price keeps going. Okay. Right here, it actually aligns with the level perfectly, but a close above here, that would be my change in the state of delivery. And you can use, this is just the box to show the line because it's already being touched. Here, let's go red. This would be change in the state of delivery if we get a close above. And you can get your optimal entry here off of this inversion. What would you be targeting? Take profit 1. You can use this as take profit 2. And the final objective is going to be London lows. All right, so let's see it play out. And over the course of the session, profit hit. But this right here is my bread and butter model. You don't have to hold the trade the whole day, right? You can maybe, at 10:40, you're going to be in this trade for like 40 minutes. You can take your profit here. I probably wouldn't hold throughout the day. I don't have the patience for that. I'm not on the screens for that long. But again, this is the bread and butter model. We take out higher time frame objective, lower time frame, we see signs of reversal, and optional, you could have fair value gap entry. But the most important thing, again, I'm going to keep preaching this, is change in the state of delivery is beyond powerful than any other PDRA, SMT too. I don't use SMT really. You could use it as an additional confluence, but a lot of people, they come into market open, they're like, oh, we have SMT. That means the market, one asset has to reverse, one asset is weaker, one asset is stronger, whatever. There's a cracking correlation. That means I have to take a trade. No. If you're trading with SMT, it should be an additional confluence to your change in the state of delivery. Okay? Are you only trading AM New York? Yeah, I've only been trading New York AM. I'm trying my best not to trade after lunch, but I'm gonna be honest, I'm taking some Shinobi alerts, and that's putting me, like today, I took one trade. It was Shinobi shorts, and that put me green on the day, and that was the $100 I needed. I entered with 2 MNQ. I'm not looking for a home run. I'm just looking for something to log my day on the prop firms so I can pull out the money. What time frame are you looking for a change in the state on? You can use any time frame. Usually it's the highest probability trades are when it's a higher time frame, meaning 5 minute or 3 minute. That would be ideal. I like this. Keep asking me questions. I can go over. Do you plan on sticking with the strategy forever, or do you ever plan on integrating Shinobis? Um, I mean, I know Shinobi strategy works for him. It works for a lot of people, and I'm curious about it. But for me, this been through blood, sweat, and tears to get to this point where I only I only take like max two trades a day in the AM. I'm looking for the low hanging fruit. So look, I'm sure you guys know what this means. I'm looking for the highest probability trade that I can see every single week. I'm not looking to force anything. Like my thing is, I can ignore a million C or B setups. I just want to take advantage of the one A plus setup. So this right here that we just took in the where I just showed you, I took it in real time a few months ago. It's in my notes. But that is an A plus setup. Should we watch NQ and ES both? Yeah, you could watch both assets. I do look at both assets to see if there's any um if one asset is making large moves and one is still consolidating, I'll be a little bit cautious. But I'm only trading NQ with light size. I'm gonna go into another trade that we took. So I can actually go into the Discord. It was on the 9th, I believe. Okay. So on the 9th, we're trading at all-time highs. Do you ever take profits early if ES sweeps a draw? Or are you targeting? Okay, so how I approach taking profit is this. So say ba 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 here. Okay, so you guys see on TikTok, all the traders, everyone's holding full targets, looking to smack the full TP all the way up here in their trades. For me, I don't necessarily need to hold all the way. I like to take profits because my model, it's not going to guarantee that the next draw of liquidity is going to get swept. It's going to be a high chance that price will trade, grind up, grind up, grind up. But I have no idea if this actual level is going to get hit. Look, I'm going to look like a genius when it does, but when we get 10 points away and knife down in reverse, I'm going to look like an idiot. So I like to take profits at other relevant levels. Like I take profits here, and you can use psychology levels too. You can use like even numbers like 19,800, 19,850, 19,900. Take profits where you are comfortable, but you also have to balance it. You can't close the trade. Let's say you enter here. Oops. Let's say you entered here. You can't close the trade 15 points in profit when you're risking like here. You can't exit the trade on 0.81 R. If that makes sense. You should be going for at least 1 R. Meaning for every dollar you risk, the potential profit is $1. I've been trading the 1 minute time frame and I'm usually getting stopped out with my system. It's already programmed in my mind to open the 1 minute chart. How do I get used to trading a higher time frame? So you have to come to the market with the mindset that you don't want to trade. You're looking to, instead of looking for ways to qualify what you're seeing as an entry point, instead of saying, "Oh, this looks good," even when it's not really looking good, you're trying to say, "Oh, this doesn't look good. I don't like this." You don't want to be placing trades. And once you see that your highest probability trade, like we just swept here. We swept 4-hour lows. 4-hour lows. We have Asia high here. We get the change in the state. That's like, for me, that's screaming at me to enter. Especially when we have fair value gap as an additional confluence. Use footprint charts too? No, that's WOB. That's WOB and Shinobi. Okay, so I'm gonna go into trade that we took on live earlier this month. So same thing. I'm going to 9 a.m. and I'm marking my levels. So 9 a.m. we have relevant London lows. We have these highs. This is a relevant high. This. What else do we have? Can zoom out on the 15-minute. No longer need the indicator. That goes bye-bye. And we have all-time highs here. I'll show you exactly what I was thinking. Okay, so what time frame did that take? So around 10 a.m. So I let open play out. For me, I was looking to take longs if we got this sweep of our London lows. But that unfortunately didn't happen. So I'm gonna let price play out. So price gravitated higher. I think we took out all-time highs. Yep, we took out all-time highs. Oopsie doopsie, I went too far. 945. Let's go. Let's go here. Price took out all-time highs, and now what I was looking for was some sort of indication of weakness. Buyers are no longer buying up here. Sellers are stepping in, and that the trend is shifting, meaning the close below the prominent low. So this was the all-time high we just swept. We made a new all-time high, and I'm looking for close under this level. So let's see. Let's see if we get it. Still nothing, nothing. Okay. Now we get a close under this. You could use an inversion as an entry. What's standing out to me is here. Could use this as an inversion. Inversion, 1 minute. And if you were if you were to take the trade without the change in the standard delivery and have a low risk entry, you could have used this inversion. So again, remember the two entries I was talking about. This is going to be here, entering early, versus entering on confirmation with the wider stop and smaller size. Okay, so I would enter short here, stop above the high. And what am I looking for? What am I targeting? Look at this move we just made. I am looking for price to trade from the high to the low of this move. I'm looking for price to trade into 0.5. And I think that's what I marked out on my chart. So let's let this trade ride. Boom. Profit target smacked. And I think in real life, I I held for around 200 points. And this is the bread and butter setup. I'm not looking to catch these longs. I'm patient from 9:30 when we open till 10:30. Basically 10:30. I waited a full hour. I was on the chart. I got on the chart. I marked my levels at 9. Waited an hour and a half for an entry. My bread and butter model, it's the reversals again. Yeah, only reversals. This is what works for me, guys. You guys need to understand that you can trade the bottom and top tick all day, every day, but you have to do what's best for you and what's really working. If you're trying to bottom tick and top tick and you're taking seven losses and then you have 3 winners, like that's gonna affect your mental. Even if your winners are big and you keep getting stopped out, that's gonna affect your mental. It's gonna affect your win rate. It's gonna be more likely that you're gonna crash out and you're gonna do something stupid. For me, I'm looking for the best setups. What do you think about using different strategies? For example, let's say I use Shinobi's and yours. I know most say not to, but wouldn't that just be me adapting to the market on the trading day? You can adapt to the market. Yes, that would work. I'm sure some days Shinobi and I are gonna like our biases, the trades we alert. they're gonna align. But he has a completely different strategy. I think he's working on the education. This is all recorded? Yeah. Uh, yes, it should be. Okay. I'm scared because I hosted a class 2 weeks ago, and it basically just recorded my browser. I was talking, charting on the trading view, and it wasn't showing it. Um, but yeah, that's pretty much it, guys. Another thing, actually, it's not. It's not pretty much it. Another point I want to make is knowing what days to avoid and what days you should be putting on risk. So if you look at my channel and you go to the pins, you scroll down, I have low probability conditions checklist. And I actually have this printed out and it's right next to my monitors and it keeps me accountable. I've seen how price typically plays out on these days. Day before high impact news, the morning before Jerome Powell speaks, during Jerome Powell's speech, if we take out higher time frame objective during the overnight session, especially bank holidays and the AM session on like half days, it is pinned. You can see right here. It's right here. You can have good trading days on these low probability conditions, right? But 7 times out of 10, 6 times out of 10, they're not going to be favorable for you. You're going to be stuck in barcode price action. So on these days, how I approach it is I size even smaller. So on my usual trades, like these shorts, I think I went I think I entered like 10 MNQ. That's my usual sizing. 10 MNQ here. On these days, I'd do like 2 or 3 MNQ. And I hope you guys understand where I'm coming from. You can have great moves. You can have beautiful price action on these days, but just for the consistency of like the analysis that and conclusion we've come to based on these days, eventually you're gonna run into a day where you're full size and you're just gonna get killed. So you want to mitigate that. You want to avoid that and protect your downside risk. You got wrecked today. Let's go to today. Tell me what you took. Off open? Honestly, everything. Okay, so for me, I remember I wanted to look for longs here, but I couldn't get them. That's fine. But now, keeping in mind that we have, what do we have? Jerome Powell speech on Forex Factory. We have FOMC and Jerome Powell speaking. Dude, like you should know that you don't want to be risk on today. Like literally do anything but trading. You can stay on the charts if you want. It's not going to help you. It's not going to hurt you. But the best thing to do is come back another day and then deploy capital. You don't want to deploy capital on morning sessions like this. I know you guys, some people are here for the alerts, but I'm not going to take a trade here in this range, especially ahead of Jerome Powell, FOMC. This one long here off open, that was the only thing I was looking for. But because I couldn't find my entry, I was hands off until I took Shinobi's short signals. How do you deal with losing streaks? I'm gonna be honest. Taking time off the screen, and you really have to come to peace with yourself and realize that you don't want to try to predict every move in the market. You want to only be able to put your chips like in poker. You only want to bet with good hands. You want to mix in some bluffs, but for the sake of this analogy in trading and poker, you want to fold all the garbage hands and maximize your value when you have a good hand. So let's say you have aces, kings, whatever. That's when you want to be risk on. You're not trying to win every single hands in the poker game. You just want to make the most when you are in a high probability situation, and you want to lose the least when you're not. In terms of losing streaks, try to focus on only one thing. One trade a day, maybe max two trades a day. Max two trades a day. And if you're done after that, you're done. Win or loss. And you want to focus on a model where everything is held constant, meaning your trades should all look the same, relatively speaking. They should have the same criteria. They shouldn't be like one trade is in the middle of the range, one trade is at the bottom of the range. I'm always looking to take trades at the top of the range and the bottom of the range. So the bottom of the range was today. I showed you guys the example on the ninth, trading all-time highs. That was the top of the range. I'm not looking to take anything in between. That makes sense. I think the hardest thing for me is giving too much value to a higher time frame, changing the state or break a structure, because it seems like for you, as long as we get a higher time frame. Yes, and Barry, I only take that setup. I only take the setup between 9 a.m. and 11 a.m. What's up, Nick? And this is all going to be on YouTube. All right, I'm going to answer a few more questions, and then I'm going to end class. If you guys are ever curious about how I trade, need help, my DMs are open. Do you consider volume as confluence? Um, yeah, yeah, I would consider volume as confidence. I'm not necessarily looking at the volume indicator, but based off of how heavy orders are, how price moves, if we get um, if we get like a breakaway gap and price uh, flies through uh, flies through the change in the state, then I'm gonna feel happier if I'm in profit. And I'm gonna hold it most likely. Usually off open, if we get large moves down, this is typically the manipulation leg. If we get this change in the state, actually let me fix that. Let's say off open today we sold off like 200 points. If we make this final low down here and instantly buy back up, close above, that's going to be an additional confluence for me. But I'm not really looking specifically for volume. Nate, which indicators do you use majority of the time for your confluence? I'm gonna be honest, like I have this stuff, the ICT higher time frame candles, this, this, but I don't use any of it. I I trade with a clean chart. I trade only with the ICT kill zones and pivots just at 9 a.m. to mark out my levels. London high, London low, Asia high, Asia low. And that's the only thing that I use. And I turn it off and then I full screen my chart and it's completely blank. Feel almost all the time we get the volume to the opposite direction of where we want to trade. Yeah, and fake out. Yeah, the Judas swing is that's a model in itself. Off of open, looking for the false move, and then trading the reversal in the opposite direction. That happens every single day, typically. All right, guys, I'm gonna end the recording. I want to stay on for a little bit longer, but I'm just gonna end the recording right now.